Okay. It being 10 o'clock, we'll call the Finance Committee to order on, we're hearing on the 13th of April. We have 4 bills before us. The first one we'll take up is Senate Bill 481, and we have the sponsor here to tell us about it. Good morning, Senator Rosenwald.
Good morning, Mr. Chairman. Thank you for the opportunity to introduce Senate Bill 481. For the record, I'm Senator Cindy Rosenwald, and I represent District 13, which is most of Nashua. This bill, as amended by the Senate, fixes a statutory conflict created by House Bill 2 of last year. As you recall, House Bill 2 required that the property be sold during fiscal year 27 for $75 million. The bill, as originally filed, had a very large general fund appropriation to fully fund the SYSC settlement fund. That appropriation was removed in the Senate, but inadvertently, the sale proceeds from fiscal year 27, if the property is sold next year, were left in the bill as being returned to the general fund to offset that appropriation. So my suggestion to this committee is that you might want to amend the bill to have the proceeds go to the SYSC settlement fund, no matter when the sale occurs. Thank you, and I'm happy to answer questions.
Thank you. Questions from committee. Representative McGuire, Dan McGuire.
Thank you, Mr. Chairman. Thank you, Senator. You said that we require it to be sold for $75 million. Wouldn't we want it to be sold for however much it brings?
Well, the reason the Senate put $75 million in was that the SYSC settlement law allows the state to settle up to $75 million a year. As you recall, what was put into the budget was $20 million for this fiscal year and $0 for next fiscal year. It's a large piece of property in a nice part of Manchester. It's beautiful. So our fondest hope and desire was that we would get $75 million for it. I don't think we would get more than that.
Thank you.
Further questions from committee member, Representative Run.
Thank you, Mr. Chair. Thank you, Senator, for taking my question. Following up on Senator McGuire's question, I don't see in the bill where it does say, Representative McGuire, getting you elevated, Dan. I don't see in the bill where it does say 75 million. It just says market value.
It doesn't.
Not less than market value.
Yeah, it shouldn't.
I think that was a different section of House Bill 2.
That is getting repealed.
Okay. All right. So in House
So
Bill 2, it
we
was more
appropriated $75 million from the sale. Jack can do a better
Okay.
job on it.
All right. Thank you.
So there's no market valuation on the property, and in House Bill 2, there was only the 20 million that you referenced. There was no 75 million. That was just an estimated guess throughout the process.
Okay. Thank you.
If I may, Mr. Chair.
Representative Stringham.
Yeah, thanks. So thank you for your testimony and for joining us here. So the current bill says if the sale is finalized before June 30th, the proceeds, and I assume that means whatever they are, whether it's 1 million or 200 million or some numbers in between, shall be deposited to the state general fund. Is this what you're saying should be further amended so the money, regardless of how much it is, ends up in the settlement fund?
Yes.
Okay, thank you. And I think that was the original intent. I know it was part of our discussion during HB2, which didn't make it into our version of the bill, but it was put in the Senate. So I thank you for that.
And the reason that it said general fund in 27 is that the original version of the bill had a large general fund appropriation. So the sale proceeds would have offset that general fund appropriation.
I see. Thank you.
Representative Tulowitzki for a question.
I just have a quick question on the fiscal note, because although it says as amended by the Senate, the date is January 30th. Is that correct? That the fiscal note is for the final as passed by the Senate?
That is correct, yeah. So the Senate passed it on the 29th of January.
Oh, well, okay, thank you.
Further questions? Representative Murray.
Thank you, Mr. Chair. Now I'm confused. Does this need to be amended again because of that line 16 about deposited to the state general fund? When do we expect this to be sold? Because 27 is next year. Is it not going to go on the market until then? It seems like we want the money to go to the settlement fund. So does this require an additional amendment, or am I misreading what's going on here?
I would suggest to the House that you amend it to put the proceeds of the sale into the settlement fund.
Further questions?
Thank you. So just so I'm really clear, we want this to say that the money from the sale of the Sununu Center goes to the settlement fund.
Yes.
Thank you.
Representative Munns for a question.
Thank you, Mr. Chairman, and thank you, Senator, for being here and answering my question. Now I'm going to join Representative Murray in my confusion. The way I'm looking at the final version of HB2, and it says that all proceeds and revenues from the sale of the SYSC shall be deposited in the Youth Development Center Claims and Administration Settlement Fund. If that's the case, then wouldn't we just want to ITL this bill?
So there were two sections. Thank you for the questions. There were two sections in House Bill 2 that dealt with the sale. Section 181 and Section 357 both talked about the sale of the property. Section 181 directed any proceeds to the general fund, and Section 357 directed the proceeds to the settlement fund.
And 357 is what I was referencing. So I
Right,
didn't,
so 181 puts the sale proceeds in the general fund. So LBA pointed out to the Senate during the process
I
of
see
the
it.
bill that there was a statutory conflict. We needed to fix it, but I don't think we fixed it exactly perfectly to meet the legislative.
thank you.
intent.
I see that reference in 181 now, and I can understand what you're saying. Thank you.
Further questions from committee members? Representative Stringham.
Further in lines 18, it says, until the property is sold, the department shall request an appropriation subject to approval of the fiscal committee. Is this new language? I know the opening of the new center isn't going at maximum speed, and there's certainly limitations. Makes it harder to sell the property on a contingent basis while it's still occupied. And obviously, we need to continue to do that. Is this something that needs to be spelled out in this bill, or is that already covered by something else? Or do you have any further comments on this?
LBA does.
Yeah, that language was put in section 181 of House Bill 2 for Department of Administrative Services to maintain the property and then request an appropriation for what they need to maintain it. So the 481 is combining the two sections from House Bill 2, essentially.
And just from history, from what I've seen for the committee, sometimes putting property up for sale is just a way to delay things or to put money in the budget that they would otherwise not have, like we just saw a bill about the Philbrick Center, which some of us went and had a tour. After a year of having it up for sale, supposedly, nothing had been done. Nothing was done about delineating how much of the whole parcel would go with that building. Nothing had been done about preparing for a move. It was just a way to get 5 million more, but nothing had been done. Years ago, we put the Laconia property up for sale, and it was up for sale for at least 10 years. It was in the budget as bringing in $10 million. And it never really, and part of it went to the public, for the Parks Department that had waterfront, and the rest of it just sat there being for sale. In the meantime, they were moving in the emergency management 911 that was in there, that had served as a community college building. A lot of uses were going on while it was supposedly up for sale, and it still hasn't been sold. So this is the caution that we all have to be aware of when somebody says, "Oh, we'll get money to do it by selling this." So anyway, just want to point that out. But if we do have some description of how it shall be sold, it should be accurate. So that's why. Thank you very much for
Thank
mentioning
you.
these into the LBA. Representative
I just have a
Zaleski.
quick question for the chairman, and this is probably a conversation we'll have in Division 3 in a work session. But I am curious if there's anyone from the department here, but I want to update on what the status is of the new facility that's being constructed, which would help us understand the timeline for the sale.
I agree.
Yeah.
Is there anyone here that can tell us what's going on with the one in Hampstead? I see
we
Director
can
White
wait.
is here.
Okay.
Or Commissioner White.
I'm gonna sit with these, because I never get to.
Not too many more chances now.
Good morning, Nathan White, Chief Financial Officer with the Department of Health and Human Services. I know that the construction plan continues as scheduled. I don't have an exact date. I'm not deeply involved with the construction on a day-to-day basis, but I could certainly provide a written update to the committee on the status of that. But the plan right now is we are potentially looking to move within this biennium. So
Thank you. Anything further? Representative Tulowitzki.
I wanted to just thank Mr. White, but if we could have in our work session in Division 3 a more detailed conversation around that with some answers and questions, I would appreciate it. Thanks.
Okay. I suppose this is a bill for Division 3. So I guess we'll plan for that and have this amendment request Jack print up the amendment as discussed and have it available for that work session.
Will do.
Come back to us perhaps with a bigger update on when this is likely to be sold and what sort of work might have to be done. There might have to be a lot of demolition of the buildings. It may not be sold with the buildings on it, although one of them is only 20-some years old, but anyway. Anyone else want to say any comments further on Senate Bill 481? We will send it to Division 3 and wait for their work session on that. Okay.
Thank you, Mr. Chairman.
Thank you all. All right, so that's the disposal of that. It will go to Division 3 and come back to us when it's all been appropriately updated and amended. Close the hearing on Senate Bill 481 and open the hearing on Senate Bill 600. And we see Senator Gray, the sponsor of that. I'll be bringing you a card. Thank you very much. Senator Gray is recognized.
Good morning. My name is James Gray. I'm a senator representing Senate District 6, which starts in Alton and goes down Route 11 to Rochester and also has Gilmanton and Stratford. One of the most frustrating things in the budget is when you don't get good data. And this bill is all about trying to get good data. The lapse report and what we were going to have to take out of the rainy day fund to meet the state's obligations. The governor's budget said it was going to be $80 million. The House budget said it was going to be $147 million. The Senate went to work on it. We thought we got it back down to the 80, if not a little lower. And the actual was like $47 million. How do you budget for a state when you've got, tens of millions of dollars, that you don't know whether it's coming, going, or whatever? Certainly our bond rating is dependent upon that rainy day fund and using it when we need to, but not using it when we don't need to. And so that's what this bill is. It's in, executive branch, you need to take a better look at these things and provide better estimates of what's going on. And that, in essence, is what I'm trying to do.
Thank you. Questions from committee members? So is this going to be that, Representative Carol McGuire?
Thank you, Mr. Chair. Senator, when I first read this bill, the first thing that came to my mind is this necessary? Can't you just ask the governor to do it? Shouldn't she be doing it already?
I can only speak that the governor's office does provide some information, but having this in a report where we can go back and look at how their estimates have changed over the period of the 2-year budget and look how they have performed in prior years also gives you an indication. And this sets a time, quarterly, that would be done. Can it be done now? Yep. Have different governors' offices been more accurate? Maybe. But, our job, both, as a finance committee here in the House, a finance committee in the Senate, and fiscal, is to be the oversight of this is going on. And I would certainly rather have an official report signed by the governor's office than, trying to do an anecdotal information.
Thank you.
Is this going to be very much different from what we get now in the monthly focus from Dana Call, the comptroller?
It's just the difference in emphasis, okay?
Mr. Chair.
Representative Abel, sorry, I didn't
Thank
see
you.
you.
Sure. Thank you very much, Senator. I agree with you. More data is very good to have. I was just curious about the fiscal note. I guess there's been an attempt to get one that's been unsuccessful to date.
Correct, yeah. I reached out to DAS in the governor's office last week, but I've not heard back. I would assume it's a minimal impact if they need any system upgrades or anything, but I'm not entirely sure.
Representative Munns for a question.
Thank you, Mr. Chair, and thank you, Senator, for taking my question. I actually have two questions. One is, I just want to make sure that I understand the wording correctly. When we talk about appropriation warrants, does that pick up all expenditures?
I would have to get back to you.
Okay. Because I would think the objective is to get a summary of not only of revenues, but also of expenditures. And then my second question is.
To answer the first question, just so that it's official, I did have help from LBA in drafting the legislation.
Okay. Okay. My second question is, we talk about, general and education trust fund appropriations, but given some of the uncertainty that has occurred recently with federal funding and the impact that a reduction in federal funding, a sudden reduction in federal funding could have on state expenditures, shouldn't we also include federal funding and federal fund expenditures in here?
Again, this is not limiting them to providing you whatever information you want. There has been several bills that have come before you guys already, especially the SNAP funding. whether that actually got to you or not.
Today is-
But there are
today's schedule.
changes out there, you know, that are impacting. In fact, there's a meeting later today to talk about corrections and other programs. And so it's not that we exclude the other, but at the time that this bill was written, that's what I believed was necessary.
Representative Alavenko for a question.
Yeah, I just want to follow up on thank you, Senator, for being present today. First of all, I want to follow up on Representative Carol McGuire's question and also the comment that Chairman Weiler made. And I'm not clear why we get a monthly report, why this is necessary on a quarterly. Is it that the monthly report isn't official, or we think there's something wrong with the, with inaccuracy in the monthly reports?
My answer to that is I can't figure out what happened between the governor submitting her budget at believed to be $80 million in lapses and other things short, the House's budget, which said 147 million, and then the actual that happened after that at 47 million. So you answer those questions and tell me why that happened, and I'll answer your question on, how I can do it.
Quick follow-up, Mr. Chairman. So isn't that an entirely different question, from the monthly reports and what the governor is doing in an estimated exercise? To me, that seems a totally different question.
To understand part of the reason behind this, you have to have a better understanding of lapse and what it takes for a department to calculate what the lapse is. Because the lapse is one of those big things that makes that number swing from. And certainly I have been working with Health and Human Services because they're one of the larger departments on the lapse. We've given them a $50 million back of the budget cut, but they not only need to make that, they need to make the lapse for us to end the fiscal year in the right. And I don't believe that a lot of the departments have a good way of calculating lapse. And I'm hoping that putting this report out there will encourage the system to do a better job at calculating what the lapse is.
It would be helpful if we knew the progress they're making on the lapse. I've started reading material for fiscal meeting on Friday, and it talks about a big grant that's coming to Health and Human Services, and they move money around, and there's a lot of things on fiscal that are just kind of balancing their budget by moving things from one line to another. But they do say in this piece I read last night is that they think they've made the first year lapse of 26 million required, and in spite of this new money that's coming in, another 20 million, I think it was, and then there's also this. So I also read that's what I read in a single audit that comes around. So, and then every month in fiscal, we're bringing in more grants that don't always show up when we do the budget. So if it updates those grants, so when I look at the especially HHS, sometimes there's a table in there showing the money that's added, and typically it's around 600 million in a year that comes in addition to what we put in the budget and all these extra grants, mostly HHS and also to safety and several other agencies that get grants throughout the year from the feds as they fill out paperwork. So it is a very much a moving target, and perhaps a little more data would help. And I don't know what we can do if it's not coming in at the right rate, but it would be helpful if we had updates when we put a fairly sizable back of the budget cut. Some agencies ignore it till the end of the fiscal year. Oh, we didn't make it, without seeing any progress report in the meantime. Representative Priest for a question?
Thank you, Mr. Chairman, and thank you, Senator Gray, for being here. and for introducing this legislation. I think it's very important. As a follow-up to my fellow representative Abel's note, I was kind of taken back that the governor's office and the Department of Administrative Services were notified 3 times this past in December for information about the fiscal note, and again in December and again in April, and no response. Is there any enforcement mechanism available that if this bill is passed and they, again, ignore the legislation and ignore the bill and does not give us the information that's statutory mandated by law, what do we do about that?
I'm not going to answer that question in this forum because it is non-germane to this amendment. Okay, it would be the subject of other legislation, and again, it's not germane to this bill, so I'm going to choose not to answer to that.
Well, thank you. But as a follow-up question, again, I mean, there must be some mechanism that the legislature has to maybe stop the payments for these various expenditures until we get the information that we are requesting. Thank you.
So far, I do not believe we have such legislation. Representative Rung.
Thank you, Mr. Chair. Thank you, Senator, for taking my question. I'm wondering if the intent of this bill is, it's really to get accurate data, correct? But people may have different methodology of acquiring or calculating that data. But this bill, from what I read, is just getting the estimates, but it's going to be based on a methodology that might be different than what might be in Senate Ways and Means and Finance and on the House side too. So is there a way we can understand the methodology that would explain differences in data? Because I'm just seeing this, we're going to get quarterly reports of data, but until we understand how the methodology, the basis of the methodology, it's not going to help us understand any differences.
There's an awful lot of things that go on in the budget, okay? Corrections has a $10 million back of the budget cut. They're going to try to do that $5 million this year and $5 million next year. They submitted a request to fiscal for a $15 million bump in their budget. I said no. We told them send it back. They withdrew it. And then they showed up in my office and I said, okay, where did the money go for all this straight time that you paid overtime for that you're asking for $15 million? Well, we used that to pay off the back of the budget cut. I said, no, that's not what you do. You do not have, I do not have, the chairman here does not have enough information to figure out how they're going to do and how they're going to make their laps. No way to know. The only one that he can even could have an opinion on that are those departments themselves. So again, I can't deal with $100 million swing between the House estimate and what we end the year with. I can't deal with that. There were certainly things that I would have rather put into that budget. And as the chair will point out, is that the Senate's estimates, what do you usually say? Were too optimistic, too rosy, too whatever. We should have gone with the House estimates. And those estimates were $350 million less than the governor's estimate. Okay?
$700 million.
There is a need for data.
Well,
And, you know,
as I said before, I look at the history of the one guy you have doing the revenue estimates in the Senate and the 20 we have doing the revenue estimates in the House. And I put my money on the House estimates for history of accuracy within 1 or 2%.
and I would remind the chair that the person that we have doing it in the Senate was trained in the House, so.
True, but the first budget, the one previous to this, where I was told to accept whatever the Senate had and not have a committee conference, and we had to dip $90 million out of the rainy day fund, which had gone with the House estimates would not have happened. But
And thank God for the the added money that we got from DRA's amnesty program.
Thank God. Representative Popovici Miller for a question.
Thank you, Mr. Chairman, and thank you, Senator, for testifying. In looking at this bill, it says that the governor office shall present a report, but when I think about it, and I would appreciate your perspective on it, it looks to me like this bill is more about setting the standards for every agency in terms of what kind of data they should maintain for their operations and then report to the governor so the governor's office can aggregate it and send it to us. Is this just about the fact that some of them don't maintain this data and we really need it in order to properly oversee them and their budget?
I'm not capable of answering that because I don't know the intricacies of the individual department budgets to be able to get there. What I can say is that the governor is the chief executive, and the executive branch are all those departments, and they should develop a way to provide us accurate information.
Representative for a question.
Thank you, Mr. Chair, and thank you, Senator, for taking my question. It seems to me, and I'm wondering if you would agree, that the government could benefit from these quarterly reports, much like the private sector currently does in private business. For instance, you could imagine that a board of governors for an institution might receive quarterly reports on their ongoing budget so that they can make timely and accurate decisions along the course of events to troubleshoot whether or not, new expenditures or new possible, hiring freezes or other types of methods should be employed to control budgetary outputs. So if that's true, if it's working in our private sector and we know it's a best practice, do you believe that the government would also benefit from accurate and timely, stable information coming to the fiscal committee so that our decision makers can more properly do the people's work by overseeing our budget?
I'm not trying to get into motive, for doing different things, okay? I'm trying to express in this bill that there is a need in the legislature for accurate information, okay? There are many corporations out there that operate very big companies and also some very small companies, and they seem to be able to do it with a great deal of accuracy. Again, not trying to tell the governor how that information needs to be collected, but that it needs to be collected and it needs to be accurate, and having it on a quarterly basis so I can plot the data of where they think they're going to go will help me develop trends and do other things that I need to do as the chair of finance and the vice chair of fiscal.
Thank you, Mr.
Representative Marty.
Thank you. I don't mean to be flippant, and thank you for being here. I appreciate the need for data. But I'm curious, I'm assuming that the people who are submitting the information now, which I do find useful, believe it to be accurate. So I'm baffled as to how will you determine whether this is more accurate than what we're already getting?
Again, in repeating what I did in the last, is that I intend to plot this data, is that this is where they think they're going, okay? Certainly the data that I had from the end of last year, where the governor's budget was 80, the House's budget said I was going to have to take 140 million, and the final number is 47, gives me an indication of how much on an ongoing basis by looking at those numbers of is the data accurate, is it not accurate? Again, I'm not trying to tell them how to do it. I'm telling them they need to do it and they need to do it accurately.
Representative Nalavenko for a question.
Thank you, Mr. Chair, for indulging me, and thank you, Senator, again, for taking this question. I want to build on what, if I hear this right, and correct me if I'm wrong, I think I worked in the corporate sector for a while, and, there's an old expression that said the only thing worse than no information is bad information. And this comes back, if I continue to hear this wrong, then correct me, but this looks like a question of standardizing the methodology and laying out how the actual calculations to arrive at the numbers are, and making sure that the underlying assumptions on the calculations are clear. Because where you get the uncertainty is where everybody's using a different set of assumptions or a different methodology. And this doesn't seem to address the question of methodology and consistency in methodology. Would you agree with that?
I did not try to address methodology in here. It is not my duty to tell the governor how to do things. I need to tell the governor what I need for information. Okay, and as we go along, remember that lapse in some of these departments. If I have a computer system I've got out to bid, and that computer system is approved before the end of the fiscal year or the beginning of the next fiscal year, can have a tremendous impact on that lapse. Health and Human Services, when you look at the amount of lapse, for that department and how much of the budget they are, there is, standard methodology may not be possible because of the differences in the departments and the different things that are going on. And again, that's why I stayed away from that. I said, this is the data I need. And I want to be able to plot it over time so that I know what the trend is. We have an increasing and decreasing, one of the things that I have DRA do for me now is that on a monthly basis, I have them put on their chart, a graph of how we're doing on revenues, both for education, trust fund, and the regular. And again, by looking at those graphs, I can start to look at the trends of what's going on. But the trend I don't have is where we're going with the lapse, how they're doing with the spending, how they're doing, certainly a back of the budget cut, they got to do it. Okay? A lapse, well, and the lapse isn't divvied out by department in the budget. It's the governor talking to her people, etc., and they need to tighten up on what they're doing there.
Follow up.
Very brief follow-up, but with all due respect, Senator, it's not a question of telling the governor what to do or the other departments what to do. In the first instance, it's understanding what they're doing and what the methodology is that they're using and what the specific underlying assumptions are in the calculations. And I think, from my personal experience, is that if you don't understand the assumptions and what the methodology is, then charting stuff isn't necessarily going to help you understand where the differences are. But thank you again for your indulgence.
I hear you. Having had conversations about lapses with various departments, and most of those, like I said, were with Health and Human Services on how they're doing because it's a big number. That how contracts are going, how their hiring is going, how all of those other things that are going that affect that lapse is more complicated than I can do. So,
Members, we have 4 bills today. The first one I've sent to Division 1. First one I sent where? Division 3?
Yeah.
Okay. And then the last 2 are likely to go to Division 3. So the chairs and Division 3 chair is not here. Division 2 and Division 1 chairs are. Does either of them want to wrestle with this further before we do a final decision?
Yeah, this is
All right, so we'll assign this to Division 1 and come back to us for the final and figure out what we want to do with this one. Thank you very much, Senator Gray, Chairman of Senate Finance. And thank you, LBA. Here's the blue sheet. For that record, we had Representative Tom Schamberg sign in as in favor.
that's fine.
Anything else from the committee? And we'll welcome Representative Daniels. Okay. Yes.
we are planning on meeting at 9 o'clock on the 20th.
Okay, 9 o'clock, is that, Division 3 members, 9 o'clock on the 20th to exec the bills. And you'll also be getting some other messages. All right, moving on to Senate Bill 603. And we have Senator Abbas here as the sponsor of that bill, 603. Thank you, Senator Abbas.
Good morning, Mr. Chairman, members of the committee. My name is Senator Darrell Abbas. I represent District 22 as the prime sponsor here to introduce SB 603. Lucky number for this state. Before we get into the fiscal side of this, just to point out the ultimate goal of this is just to allow the Department of Health and Human Services to be able to go before the Joint Fiscal Committee in the event that there is any shortfall in the funding for SNAP benefits. The reimbursement rate was reduced in July, last July. The issue that created for us is that we passed the state budget a month earlier under a different understanding of what those reimbursement rates would be. As a result, assuming all the estimates are what we anticipated they would be, it would fall short in the last 6 months of the biennium. I'd like to point out that the SNAP benefits, in addition to providing a public service, that a lot of that money is put back into our local economy, particularly small businesses, grocery stores. So I would like to think that we weren't off by by basically 25% in the amount of money we allocated towards it. But again, this allows the department to go to fiscal to seek anything over $100,000. They would have to obviously get approval, make a demonstration of what that shortfall is, and the money would also have to be available. So I would hope you would support this and hopefully unanimously, and I'll be happy to answer any questions.
Thank you, Senator. Questions from committee members? Thank you. Representative Tulerski.
Thank you, Mr. Chairman. Thank you, Senator, for being here today. Can you just maybe simplify it a little bit for me how this applies to the department's existing back of the budget cut? Is this basically just telling them they need to find the money and move it around on top of the back of the budget?
I think if they can't find the money, if there is money available, they'll be able to go to the fiscal committee. Again, that's a big if. But I know right now what we put aside was under an understanding of a different reimbursement rate. So again, unless something changes beyond any of our control, I'm assuming it's going to fall short. And this is more of a safety net to kind of embrace for that impact.
Thanks.
Representative Munns for a question.
Thank you, Mr. Chairman, and thank you, Senator, for taking my question. I just want to follow up on the question from Representative Tulerski. Given the fact that the Department of Health and Human Services already has to find $50 million in a back of the budget cut, this seems to create another challenge for them if in fact the SNAP funding is cut. Well, we know the SNAP funding is going to be cut.
It was already cut.
Yes. Why wouldn't we, the way the bill is worded, if I understand it correctly, it specifically says that we can only move money around within the Department of Health and Human Services. If we have extra money in the Department of Transportation, for example, why couldn't that money be used to fund this? Why are we limiting this to just moving money from within the Department of Health and Human Services accounts?
Well, I haven't discussed that with the Department of Transportation, but I get a feeling that they wouldn't like that. And I think given what this is for, this program gets often criticized. There's a 5 to 7% error rate. And I'm not defending that number by any means, but for the 93 to 95% of the people that are using this, I mean, when they're relying on this for their life, basically to feed themselves or their family. And for it to fall short, I think in the next biennium we'll know what will be better prepared to address this, and this bill would become obsolete. But I think for the time being, it's important. But If you guys can find the money from another department, I'll leave that to the wisdom of this committee.
Thank you. Follow up, and then Daniel Popovici Miller. Follow up by Representative Munns, you've done. Representative Popovici Miller.
Thank you, Mr. Chairman, and thank you, Senator, for being here and taking the question. As the prime sponsor of the bill, this is not an area of the budget that I'm very, proficient in. Can you give us an idea of how much would the funding shortage be estimated for the, biennium? Because I'm trying to wrap my head around how big of a chunk of money are we looking for here?
Well, first of all, it's anything over $100,000. Again, they have to get it approved by the fiscal committee. But if it was cut, I'm estimating this, but it's about 50 cents on the dollar. That it was reduced to 25 cents on the dollar. So I'm assuming we're going to be about 25% short. Give or take, my understanding that can be around 6 to 8 million. Again, I don't have the numbers in front of me. There's people. I hope there's people here from the department that can speak better on some of those details, though. So don't quote me on that.
Thank you.
Representative Munns again.
Thank you, Mr. Chairman. I just wanted to hopefully help answer the question that the representative just asked. When we heard at HB 1750, which dealt with this funding issue, the shortfall was estimated to be $4.4 million per year.
Yeah. My copy doesn't have a fiscal note still, so.
All right. Vicky, did you have anything?
I just want to weigh in on that fiscal note and cost issue. So I'm not sure why the version you have in front of you is so old, but there is a fiscal note dated January 20th that's attached to the bill online. And so that shows an estimated cost of $4.6 million.
I think that's better than the answer I gave. So that's.
Thank you, Kevin. All right. I've got several people want to testify on this. You may find answers from them. Somebody from the department is here as well. Representative
Thank you.
Delavinco.
Thank you, Mr. Chair, thank you, Senator Abbas, for your testimony. Just a couple of points of clarification. My understanding is that this is the result of a 75% to 50% cut in the administrative cost portion, not in the SNAP benefits per se. And that's where the cut from the feds occurred. So my understanding was it doesn't affect necessarily the availability of food because this is an administrative cut. And then the second thing was there was some discussion as, does it set a precedent for the state to pick up cuts that the federal government is making in various programs? And I'd just like, appreciate your comments on both of those. And then, of course, there was discussion on the error rate, and there's a penalty associated with the error rate being above a certain level. So, it's like my understanding of what the cut is in the administrative reimbursement cost part of the funding, not in the actual SNAP benefits.
Well, from what my understanding is, what we put aside for this, it's not going to be sufficient as a result of the federal cuts. Now, when it comes to a precedent, listen, we really can't control what the federal government does. I guess it's up to us if we want to carry on with as it was or make changes in the future. The problem is, it's just the time sequence of when this was done was in July of 2025. We passed our budget in June of 2025. If we passed our budget in August of 2025, which I'm really glad we didn't, but if we did, we could have addressed that in the budget and moved on as we saw fit. The concern I have is just simply, if we do nothing, knowing it's going to run short, I don't think that's a good policy, and that's not a good precedent. Now, we can point fingers all we want, and I think in the next biennium, we'll be better suited to figure out how we want to approach this. But this is really to fix it in the short term, and I think the long-term solution is for next biennium.
All right, we're running over, so if we can get
I
the
hope I
rest of
answered
the
them all.
people to come before us and then hold our questions till later. So, thank you,
Thank you, Mr. Chairman.
Senator Abbas. We'll next call Senator Rosenwald. That's the next one. Disregard. You got it in early. So one of the persons I'm anxious to hear from are from the Health and Human Services. I have Brian Clark and Nathan White. They will give us a little more information about error rates and what it costs the program. Welcome.
Thank you, Chair, members of the committee. My name is Brian Clark. I'm General Counsel for the Division of Economic Stability.
And Nathan White, Chief Financial Officer of the Department of Health and Human Services. We're here to answer any questions you may have. I can clarify just a few of the points here. Senate Bill 603, as written currently, it's very consistent with RSA 916A. If the department has to transfer more than $100,000 within an account, we currently have to come through fiscal. As our budget is currently written, as the senator had indicated, we would have about estimated $4.6 million shortfall in our general funds. There were assumptions that were made when we put the budget together and it was passed that reflected that admin percentage, which shifted from 50-50 to 75-25 in favor of the federal government, that we will be short those amounts. So those dollars are budgeted across dozens of various accounts. They're budgeted in personnel lines, they're budgeted in contract lines, they're budgeted in indirect lines, and a variety of places. So we would, without this bill or with this bill, we would have to transfer general funds into those accounts in accordance with the existing laws. So the bill itself is consistent with RSA 916A, and you know, functionally, you know, the question came up around what does this look like? And so whether you put it here as a piece of legislation or the department has to find $4.4 million, those expenses aren't going away. The only thing that went away was the revenue. And we have to solve that problem either way in the next biennium. I know that Division 3 had heard a bill relative to a $4.4 million general fund appropriation to address this, but I don't believe that had passed the House. Just one quick comment on the error rate. That is not related to the administrative rate. We can, that's a very long conversation that we don't necessarily have to have here today, but more than happy to discuss it if you'd like to.
So the error rate, if it's at 6% or less, does not affect the distribution. But if it goes, as ours is about 10%,
Yep.
then monies are deducted. You say they're not deducted from administration. That was, is this a change that's universal to all states, going from 50-50 to 75-25?
So there's two major changes that came out of the One Big Beautiful Bill related to SNAP. Well, there's many changes, but that we're discussing here today. The first is the administrative rate change, and that's simply the amount that the federal government will reimburse, and that becomes effective at the end of Q1 of state fiscal year 27. So federal fiscal year 27, October 1, it takes effect. The second, which takes effect October 1 of 2028, that is the state cost share. And that is the total amount that the state may or may not have to contribute to support the direct SNAP benefits. And there's varying levels. If there's a 5%, if the error rate is 6 to 7.99%, then the state would have a 5% match. If it's from 8 to 9.9, then it would be a 10%. And if it's 10% or higher, that's 15%. And that won't hit until next biennium. The error rate last year was 7.57%, so that would put us in the 10% match realm. What we're looking at for 28-29, about $12 million, so $16 million of general funds would be needed if that error rate continued. Just a really quick comment on error rate. Error rate is not an indication of fraud. It is an indication of administrative error. It could be a penny off, and it's considered an error, and it feeds into that. So it's not necessarily a measure of acuteness of errors. It's a measure of all errors, no matter whether they were on the part of the beneficiary or somebody simply keyed something incorrectly.
How many staff are reviewing on a regular basis, probably every 6 months, the eligibility of people that are receiving this benefit? There's lots of rumors that everybody's getting it, and many of whom have other jobs and other income that they shouldn't be eligible.
So I don't have the exact number off the top of my head, but there are specialists that review that. That team is running, last I checked, about a 25% vacancy. Approximately 70 positions were unfunded related to that effort. So the challenge that we see is if we don't necessarily invest in that today, then that has an impact on the payment error rate. And we won't know the federal fiscal year 25 payment error rate until later this year. So whatever we do today won't necessarily have a change for a number of years. And so that's just where it makes a challenge. We are making investments in the systems to automate things as best we can. But again, whatever the error rate is today, that's going to take a few years, or the work we do today is going to take a few years to catch up, which is where in the next biennium, it's just going to be really important to think about that long-term investment to make sure that those error rates continue to stay down.
Questions from the committee? Those are the people that should know. Representative Chelerski, then Representative Stringham.
Thank you, Mr. Chairman. Thank you for taking my question. So I know that this committee understands that we passed a budget that expected X amount of money coming in from the federal government to pay for the administrative fees with SNAP. And 4 or 5 days later, the federal government signed a new law that we now understand is going to put us $4.5 million in the hole. To simplify things, taking away at the error rate question and all those other things, does Senate Bill 603 simply give the department the ability to move line item money around if it is available to help backfill that $4.5 million hole? Or am I boiling it down too much?
It's consistent with the existing law under 916A. But from a policy perspective, it makes the legislature's intent more clear.
Thank you.
Representative Stringham, then Representative Dan McGuire.
You know, if these funds are not available, can you predict whether, or do you have any sense of whether those eligible may not be able to get on SNAP because there's simply not enough staff available, and whether there would be any impact on the error rate? So that's part of the question. The other part is, if we include an appropriation as an amendment to this bill to indicate the amount of downshifted costs that are being assessed to the state of New Hampshire rather than the federal government, would that be helpful to administer this program through the rest of this biennium?
Sure. Thank you for the question. As it's been indicated, the department has a $25.5 million back of the budget for each year. State fiscal year 26 has been satisfied. We're still planning for state fiscal year 27, which means we obviously have fewer funds. If we do not receive an appropriation, many of you do see the regular department-wide transfers that we bring forward. What that basically reflects is it reflects us looking at what revenues have we earned versus what we budgeted, what general funds do we have available, what positions are filled, what contracts have been obligated, what contracts have been liquidated, what funds are remaining. It's a fairly complex balance of things. But obviously, if we have $4.4 million of general funds less than what we had anticipated for this program, that could potentially result in us looking at those class lines, looking at the source of funds. Now they're short. What do we do? Do we hold these positions vacant here, or do we take from another program that was adequately funded? And those are questions that I don't necessarily have an answer to today, because ultimately it's the commissioner's prerogative on what the priority is. But you could certainly see a scenario whereby there would be a stronger likelihood that the positions in this area may be unfunded. But we're also very aware of the long-term costs of that payment error rate, and the more errors, the more long-term obligations that the state's going to be on the hook for. So there's some impact. What that direct impact would be in state fiscal year 27, I can't definitively state today, but I can provide you with a broad picture.
Senator Dan McGuire, then Representative Nalvango. Then
Everybody wants me to move to the Senate. I don't,
Remember,
I'm
we're
not
running about
interested.
a half an hour late for those people that came for Senate Bill 663. We're a half an hour late on that one.
Okay. Thank you, Mr. Chairman. Thank you, gentlemen, for coming. We had a related bill, House Bill 1750, and I remember reading the fiscal note to that bill, and it seemed like there was very high administrative costs to this program. Can you tell me how much administrative cost is there per recipient, and also per how much federal dollars related? You know, what's fraction of the total program is administrative cost?
Sure. So in December 2025, there were a little over 75,000, or as of December 2025, about 75,000 SNAP participants. The total, if you look at the total admin spend and you look at the state admin cost per dollar distributed, it comes out to about 8 cents.
Per dollar.
8%.
8 cents per dollar, or 8%.
8%.
Yeah,
right.
another way to look at it. Sure.
Okay, thank you. And total amount of administrative cost divided by 75,000?
Approximately 24.4 million in state fiscal year 25.
Okay, I'll have to do that math. All right, thank you.
And that figures on a daily basis, the 8
Okay.
cents.
Thank you. Representative Nalvango.
Thank you, Mr. Chair, and thank you, Mr. White, for being available to take my question. So it may be my misunderstanding, but and it may be a misconception in the general public. Regardless of whether or not this bill passes, it's my understanding that nobody loses SNAP benefits directly as a result of the difference in the administrative costs, and that those administration, I recognize it would have to be dealt with within the general budget of the Department of Health and Human Services. But just to be clear, for everybody, nobody's going to lose SNAP benefits directly, regardless of what happens with this bill. Is that a correct statement?
No. We had to come up with monies that we gave to the food banks about a year ago because of lower funds in SNAP.
Yep. And just one further comment on that. My other understanding was the governor, during the period where there was a general shutdown in government, did an emergency appropriation, not all of which was used. And I think there was, correct me on the number, $1.7 million or $1.4 million that went back into the department as part of that emergency allocation specifically for the SNAP program.
Yes, that is correct. There was an action that we brought forward to fiscal committee for $2 million. The situation ended soon thereafter, and we only spent approximately about $100,000. The remaining $1.9 million was written down as part of the back of the budget cut.
Thank you.
Representative Munns for a question.
Thank you, Mr. Chair. Thank you for coming in. Since this bill only addresses moving money within accounts, within Department of Health and Human Services accounts, and I think you've indicated that you're already able to do that. Is this bill really necessary?
I think you're getting into a policy question around whether the legislature wants to formally declare its statement of intent.
Right.
As I had indicated, RSA 916 requires that we go through fiscal for any transfer of $100,000 or more. So it for me, it kind of moves into the policy question, which I would defer to all you on.
Okay. And follow up? Is there anything in legislation currently that prohibits the movement of funds from one department to the Department of Health and Human Services to make up any shortfall? And then the additional comment there is, and if there is, would we need to make some legislative change?
The only times that I'm aware where funds are transferred between departments are where we have written MOUs for very specific purposes, and we have receiving and transferring class lines. I'm not aware in recent memory of any scenario in which funds were transferred from one department to another to shore up a budget shortfall. And I think technically it could be done. I've never seen that done though.
Okay, members, we got a couple more people that we want to hear from. If there's no further questions, thank you, gentlemen, very much for the details. We'll next call on Heidi Johnson from the New Hampshire Food Bank. Good morning.
Good morning. Is this on? Okay, there we go. So good morning. I am Heidi Johnson. I'm the SNAP Outreach and Application Assistance Coordinator for the New Hampshire Food Bank. So I lead our program. I talk to a lot of people who are on SNAP. Been trying to follow up and stay up to date with all the things that are happening both at the federal level and at the state level that will affect our SNAP recipients. So you may know that the food bank, the New Hampshire Food Bank, is the only food bank in New Hampshire that we're a program of New Hampshire Catholic Charities, and we are also a member of Feeding America. So we have a lot of, we're very vested into the well-being of those Granite Staters who are experiencing food insecurity. Last year, we distributed 20 million pounds of food, which is equivalent to 24 million meals. And that still fell far short of the need that's out there. For every one meal that the charitable food system provides, SNAP provides 9. And Feeding America's map, the meal gap for 2025, has indicated that Granite Staters, there's 1 in 9 who experience food insecurity. 1 in 7 of those are children. So there were some questions. Republican Nailavanko, is that how we say his name?
Yes, he'll be back. We'll wait.
Okay.
He gets
But
back
he
to
had
his
asked some
question.
questions about like, how is this related to the payment error rate? Is this like actually affecting anybody from receiving SNAP? And as the Department of Health and Human Services has indicated through testimonies throughout various SNAP bills, including this one they touched on as well, is that what happens with what affects payment error rate, one of the things that greatly affects payment error rate is how many times they have to touch a SNAP account. And that could be one of their staff meaning to do well but making a mistake. And so the fact that it's underfunded, right, because of the requirement of the federal bill, federal HR 1, to decrease the amount of funding received from the federal government, that means if the state is not providing the number of people that are needed, the number of staffing that's needed to accurately administer the funds, the accounts now, that's going to affect the payment error rate and how much we as a state have to pay if we have to pay. And so it's very important to take the longer look to say, this needs to be funded. However you fund it, it needs to be funded for the long-term effect. Well, it's only 2 years out, right, that we're going to have to look at the payment error rate and how much we as a state pay. So I want to encourage you, whether it's funding this bill or another bill that appropriates the funds from from the general fund, that we make sure that the administrative costs are covered and that they're covered well so that we can lower that payment error rate. So that's my ask of you today.
Thank you. So do you give food to anybody that asks? Maybe ask for a contribution, but you don't require it. an ID, you don't require a SNAP card, you don't require anything, just somebody asks for food, you give it to them.
Yeah, so the way the food bank works is we actually distribute food to our partner agencies who are the soup, soup kitchens, food pantries, et cetera. So we don't have, now if somebody happens to walk into the food bank, we actually have an agency right next door to us that we can take them over to and help them. But different food pantries, they have different qualifications. Sometimes they look at is the resident in there, do they have an address within their jurisdiction? I can't speak to all of that. It's a different department than mine, but I could certainly, if I understand what you're looking for, I can certainly ask our agency relations to speak to that and get back to you on that.
So some time ago, when the SNAP funds stopped for
Yes.
a bit,
Mhm.
we sent more money from the state to the food pantries.
Yes.
And we asked if you had a big increase in the number of people asking. I don't remember if we got any feedback. Can you give it to me now?
Yeah, we had, so I know this and I could give you more exact numbers, but I do know that through that time, we provided the equivalent of 136,610 meals in 2 weeks. And the reason that stopped after 2 weeks was because the SNAP was, the government was out and was refunded and SNAP, was refunded as well.
136,000 more than you usually gave out?
Yes, sir.
By
And,
how much more?
I don't know what our current, 20 million pounds is what we gave out last year. So that's 24 million meals. And so this was 136,610 meals.
So it's difficult to say how long it was, what effect it was. Did you go that year for more than 24 million meals, or was that last year's?
I'm sorry, what was the question?
So I'm trying to discern
Yes, sir.
when the SNAP money stopped and we sent state money to the food banks and said, hey, we got a problem here, more people will be coming to you now.
Mhm.
We never got a feedback of what the increase was in the meals you gave out because of the SNAP.
Well, it was the 136,610 meals. That was above and beyond what we would normally
That was
have
the
done.
increase. That's what I'm looking for.
Yes.
Thank
yes. Mhm.
you. All right.
For those 2 weeks.
For that, how many weeks?
2 weeks.
2 weeks. Thank you very much. I hadn't heard that before.
Okay, sure.
I wondered how much it was. Questions from the committee members? Representative Dan McGuire.
So I just did the math here. So if you're doing 24 million meals a year, that's roughly 500,000 meals a week, right? 500,000. And if you, an extra 136,000 in 2 weeks, that's maybe an extra 14% during those 2 weeks, is what it sounds like to me. Okay.
I'll trust your
Thank you.
mathematics on that.
Glad to have your input. Thank you. Further questions from the committee members?
No,
Seeing-
it's 2 weeks.
2 weeks.
Right, but normally 1 million in 2 weeks,
Yeah.
right? Now it's 136,000 more, 14%.
Of what it
Okay.
would have been had all those people had. So obviously, they didn't all go to the food pantry. They coped somehow the way. So
Right, but if it had lasted more than 2 weeks, it
might have been a big problem, but thank you for
Right,
what you do.
yes. I know that people were, trying to, save up what they could for those, not knowing how long it would be, but you're right. The folks, I'll tell you what, the mobile food pantries that my team, so my team at the food bank weren't at the pantries, but we did the mobile food pantries. And I'll tell you, the lines that we saw were, we were just, our job was to, check their SNAP card, make sure they were SNAP recipients. And we were just running just to make it through 6
No,
hours.
I know a local person that I've known for years that went to work for the food bank.
Oh, okay.
Has convinced me to make contributions to.
Well, thank you.
Appreciate what you do.
Yes,
So
appreciate that.
I know there's a lot of people dependent on you.
Yeah.
There's no questions. Thank you very much. We've got one more person who wants to speak to us. Laura Milliken from New Hampshire Hunger Solutions.
Good morning, Chairman Weiler, members of the committee. My name is Laura Milliken. I'm the Executive Director of New Hampshire Hunger Solutions. We're a nonpartisan nonprofit organization dedicated to ending food insecurity and supporting our state's economy. I'm here today to urge a not to pass recommendation for HB 603. I won't take up your time. I have written testimony to distribute and a handout about the importance of SNAP in New Hampshire. Most of what I was going to say has been said. I will just say that this is an absolutely critical program. The conversation you were just having with Heidi Johnson, shows what happens in a 2-week period. But those mobile pantries were only in a few locations. That was not everybody who was on SNAP. So the harm that would be caused if SNAP were in any way restricted is huge. So. And the error rate is it's not an immediate loss of food, obviously. The cut in administrative costs, but if the department can't do its job effectively, then down the road there are significant costs that may cause us to need to make cuts in who gets food, which is really troubling. So with that, I'm happy to take any questions.
What kind of budget do you have for a yearly basis?
What kind of budget does New Hampshire Hunger Solutions have? Just under about $1 million.
How many?
Just under $1 million, about.
Under $1 million?
Yeah, 900,000.
I guess that's far short of what they're spending in SNAP.
Yes, and we don't provide food. We're an advocacy organization. We work with schools. We work in communities to build coalitions to address hunger at the local level, but we are not a charitable food provider, but we work very closely with those who are.
Thank you. Questions from this person? Seeing none, thank you very much.
Thank you.
I will close the hearing. Thank you for your handout. I will close the hearing on Senate Bill 603, and we also have signed up Kelly Earhart from Nashua is pro. Laura Milliken, you've heard from. Heidi Johnson, you've heard from. They were in favor. And Emily Lawrence from Waypoint, and she has a handout you all have in front of you. All those people are in favor. We'll now move to Senate Bill 663. And we have, that's the one that I was going to call Cindy Rosenwald on. She is the sponsor.
Thank you, Mr.
Welcome,
Chairman.
Senator Rosenwald.
For the record, I'm Cindy Rosenwald, representing Senate District 13. And this was a late filed Senate bill. And I'm pleased to have the chance to introduce it. Its point is to help stop an emergency in the nursing home sector by directing the Commissioner of HHS to convene a working group to examine our rate-setting methodology. Our current methodology takes into account previous cost, resident health acuity, and the budget neutrality factor. The budget neutrality factor, which was put into statute before I was elected, but after Representative Wallner was elected, requires the state to cut spending as nursing home costs rise so that the total spend is not greater than the appropriation. And I think this is particularly Byzantine. It affects all nursing homes, but especially the private ones. So Section 1 of the bill, basically the heart of the bill, requires the commissioner to convene a stakeholder group and report any recommendations on changing this methodology on reimbursements by the end of the year. As you all know, the department sets nursing home rates twice a year, And in January of this year, nursing homes realized there were going to be really devastating reimbursement cuts. At some point, I think it was October, the fiscal committee transferred $2 million within the HHS appropriation to help mitigate these cuts. This was very helpful, but it wasn't really enough to stop the hemorrhaging. There were 33 nursing homes in our state, including 10 county nursing homes, still ended up with substantial cuts on January 1st. And 19 nursing homes were cut really substantially. I think there are several reasons why we need to make sure we have a viable nursing home sector and prevent losing more nursing home beds. Medicaid pays for more than 60% of nursing home care in New Hampshire. For seniors who meet both the financial and medical eligibility criteria, nursing home care is an entitlement, which community-based care, the CFI waiver, is not required, even though it's less expensive. So if nursing homes, most of which are privately owned, cannot cover their costs from their largest payer, they face several choices, all of which have an impact on our healthcare system writ large and on our people. First, they might close altogether, as a 45-bed facility in North Conway did last year. Second, they might close units to save money on staff and supplies. Both of these scenarios will result in patients remaining in hospitals beyond the point where they need hospital care because there isn't a nursing home bed available. The end result of that is a financial drain on hospitals and a lack of available beds for patients who need hospital care. I know we've all gotten complaints about patients waiting in emergency rooms or hallways because no bed is available in a hospital. But I think that the third result of cuts to nursing homes is actually the worst and the one that I think is the most morally wrong. That's when nursing homes have to cut staff and residents receive less direct care, jeopardizing their already fragile health. And this is a movie we've seen before, starting 15 years ago during the Great Recession. At that time, nursing homes were forced to reduce staffing, and the impact on residents was really hard. We heard from their families, those of us who were in the legislature, that their loved one was not getting an appropriate level of care. So someone who, for example, needed to help to get out of bed or help to go to the bathroom would ring a call bell, and it might be hours before it was answered. And I'll just leave you to imagine the result of that. We're talking about the oldest and frailest granite staters, people's spouses, parents, grandparents, surely are among the most vulnerable. So I hope the committee will agree with me that we have to do what we can to ensure their safety and well-being. I will say that I have been working in the Senate with Senator Lang and the governor's office to find a few $1 million, either of general funds or from the predicted non-binding additional net revenue estimates that could be matched with federal funds to boost a one-time allocation for this fiscal year. We've done this before a few years ago for one particular nursing home in Derry, I think. We don't know yet what the governor's preference is for where the money is going to come from. My guess is that the Senate will attach that appropriation to at least one House bill. But if this committee has the time before you have to act, any interest, I'd be happy to share that language with you when we have it, and maybe you could put the original appropriation from the bill back. Happy to answer questions, but I know there are
Thank you, Senator.
other
Questions
people
from the
behind
committee?
me.
Representative Carol McGuire.
Thank you, Mr. Chair. Thank you, Senator. So if I understand correctly, the point of this commission is to totally revamp how we set Medicaid rates for nursing homes?
It's to look at how we're doing it. As you recall, in, I want to say 2006, we made a change. We made an agreement with the counties that they would take on children, and that the state would take on children, and the counties would take on long-term care. But we cap the amount of liability that the counties have. And I've heard from Mr. White that he thinks that maybe within the next budget, the state might actually be paying 50% of the long-term care costs. So counties are capped. Their cap is not rising as fast as the cost of nursing home care. As the state's getting older, we have fewer nursing home beds. We have some that are not online. So it's a fragile but critical system. So I don't want to predict that it would totally revamp how we do the rate setting methodology, but there could certainly be some changes that the commissioner would bring forward.
Further questions from the committee? I recall when some years ago, the Medicaid was 50% federal, 25% state, 25% county. And after a period of years, the state began to reduce their share to as little as 15%. So the rest had to be picked up by the county. And that was kind of done without much discussion with the counties. And so eventually, we on Finance Committee capped the amount that they could keep pushing on to the counties because it was coming unexpected and you never knew what it would be. So we made a certain amount. We're only allowing it to increase so much a year.
Right.
So it's helped the county budgets a little bit, but of course it means a lot of the expenses picked up by the state with ever diminishing revenue. So let's hope this group can come up with something that can find a way to be more efficient.
I'm an optimist.
Yeah. Very good. Any questions from committee members? Seeing none.
Thank you.
I'll next call on Brenda Williams, I think it is, from the New Hampshire Health Care Association. Or is it Brendan? Must be Brendan.
Thank you, Mr. Chairman. You can call me Brenda, but I'm Brendan Williams, president of the New Hampshire Healthcare Association. I have terrible handwriting. Thank you, Mr. Chairman, for this opportunity to testify. We represent nursing homes throughout the state, as well as assisted living facilities, a pediatric care facility, and some continuing care retirement communities. can't really improve on Senator Rosenwald's recitation of the facts. The January 1st rates were a shock for nursing home providers. I really thank the fiscal committee for stepping up, you, Mr. Chairman, and members of the fiscal committee for stepping up and effectuating a fund transfer that brought the harm to a average rate increase of 2 cents per resident per day. It would otherwise have been almost a 4% rate decrease. But with that said, there were facilities that were very, very hard hit. I have behind me here representatives of various nursing homes, including Sisters of Holy Cross from the Holy Cross Healthcare Center. Their 24-bed nursing home took a cut of 11.74%, which is $31 per resident per day. And you can imagine a facility that small, the impact of that sort of cut. We also had a nonprofit member in Wyndham that took the state's largest cut, 14%, almost $46 per resident per day. And as Senator Rosenwald testified, the state of the sector is pretty precarious. We have one of the 4 oldest nursing home populations in the country, which I think is a testament to success in keeping people at home. So that when they enter the nursing home, they tend to be very frail and certainly very old compared to the national averages. Senator Rosenwald mentioned that there was a facility that closed in North Conway, a 45-bed facility last October. That was the first closure since 2016. Friday, a 50-bed nursing home, also a nonprofit in Whitefield, declared Chapter 11 bankruptcy. So this sector is teetering. And to Representative McGuire's question, we're not, looking necessarily to revamp the entire system, but certainly the sort of irrational aspects of the system that we saw manifest themselves on January 1st, where, for example, a facility like Epsom Healthcare Center, which has a very high Medicaid patient acuity. In other words, the needs of its residents are quite high. It's serving the Medicaid population that's most vulnerable. Still saw a 3.5% cut, almost $10 per resident per day. These are not rational results of a rational nursing home reimbursement system, and it hasn't been changed substantively during my time, and I've been here 10 years. And there's been a transition from one payment model to another due to a federal change. The federal government had been supporting what was called the RUG system through Medicare and stopped supporting that. And so states had to switch over to what's called a patient-driven pay model, PDPM. And unfortunately, some of the vestiges of the old system are interacting in a bad way with this new system. And nothing has changed within our rules with respect to how those two systems are interacting. And so we're seeing a real wild variability in terms of the rates. And as Senator Rosenwald said, the number of facilities that experienced very severe cuts was especially troubling and included a number of the county homes. So we commend the idea of this working group to you. It would have legislative involvement. I think that's great because I think there are a lot of legislators who probably aren't aware that there's a budget adjustment factor that subtracts a good portion of the rate that the state would otherwise pay, and that is not made up entirely by the provider tax that facilities pay. So a facility like Holy Cross Healthcare Center with 24 nuns is still seeing, even after it gets the return on its bed tax, it's still seeing a cut effectively of around $30 per resident per day, even without a cut, just because of the budget adjustment factor. So you add the cut on top of that. So we commend the idea of the appropriation, the supplemental appropriation that Senators Rosenwald and Lang are working on in conjunction with the governor's office. And we appreciate your consideration of this bill. With that said, if you have any questions, I'm happy to take them.
Any questions from committee members? Representative Stringer.
You know, budget neutrality is built into a lot of government fee schedules, hospital inpatient, outpatient, physician fee schedule. So this kind of problem is pretty common. Do you think this kind of group would be able to get at the issue of how cost reports are prepared and whether there's any perverse disincentives from using lessons? For example, volunteers, if they come in and work, I don't think there's going to be very much cost built in. And if you're using actual cost to generate proportional reimbursement from one nursing home over another, it may lead to a spiral. Do you think this kind of group would be able to address that kind of an issue? And do you agree that's an appropriate issue?
Well, I will say that we are one of 5 states with a budget adjustment factor for nursing home rates, which is really an artificial constraint on the rates based on what the legislative appropriation is. But with respect to your question, I think all facets of the system should be open for scrutiny with respect to the working group. I really think to have that sort of robust discussion, I sort of see this as being a teaching moment, if you will, for all involved. And I think it will better inform legislators, both House and Senators, as to how the system works. I'm always happy, by the way, to take any of you through a nursing home and kind of see for yourselves sort of how everything works. I'm accompanying Senator Pearl to a nursing home this afternoon.
Further questions? Representative Dan McGuire.
Thank you, Mr. Chairman. Thank you for coming. So if the overall change was essentially nothing, but some facilities got 14% cut, then there must be other facilities that are getting gains, right? So can you explain in a little detail, not a lot, kind of how the formula, what factors in the formula caused the disruption? You know, that some gained a lot, some gained nothing, some lost a lot, et cetera.
Well, this is an opportunity for a fantastically complicated answer. So there is, the nursing home rates are set twice a year. So January 1st and July 1st, and they're based on what is called a picture date. So the July rates are based on a February picture date. The January 1st rates are based on an August 31st picture date. So we're talking the January rates here. So on August 31st, the state has a picture of what the Medicaid case mix index is for each nursing home, which is to say how complicated the care of the residents is. It's a score. And divided into that score is what's called the all-payer case mix index, which in this case was from August 31st of 2023, which was under a different payment system. So that was under the RUG-4 payment system. They divided that number into this figure that was derived under the PDPM system. If your all-payer divisor is bigger than your Medicaid CMI, you're going to get a rate decrease. So in other words, if your full house has a care that is more complicated than just your Medicaid residents, that's going to lead to a cut. Now, we typically will see in a rate set, for example, there was a 2.4% rate increase last July 1st. But there's always winners and losers. There's always going to be some facilities that go down. In that case, of the 74 nursing homes, now 73, of the 74 nursing homes, there were 13 that saw reduction. We don't argue with that. I mean, there are going to be instances where a facility's case mix fluctuates. But what we have never seen is what we saw January 1st, where so many facilities saw a cut, over 30 facilities saw a cut. And so what we think is that the all-payer divisor is really sort of perversely punishing facilities that take care of the most acute Medicaid residents. And it's basically blowing up all the good work that they do caring for those with the most complex medical needs.
Follow up.
Thank you. So let me ask the question maybe a slightly different way. Is the reimbursement rate for two identical patients, two patients with similar characteristics in terms of what their needs are, but they're at different nursing homes, is it the same for both? Or is it somehow other things going on at that particular nursing home that says, well, we'll pay less for this patient and more for that patient?
It would be different, Representative, because it's based on the aggregate score. So it would be based on the aggregate case mix index score. And so that's how you get paid. And so if a facility, for example, has a very complicated Medicaid population with a high score for that, but happen to have a number of Medicare residents who, as you can imagine, being discharged from a hospital, have very complicated medical needs, and that creates a higher all-payer score from a couple years prior, then that could blow up everything that you did on the Medicaid CMI.
The cruel forces of inflation have caused a lot of problems in this business, Les all. I was on a Masonic nursing home board for a decade. And the only thing that allowed us to keep going was we had a multi-million-dollar endowment. And we were drawing money out of it every month. And the other thing that we noticed was we had a disproportionate number of Medicaid patients, which of course underpays, as we all realize. And what was happening was the private pays in the area, people might come in with, sell their house and have 200,000-300,000 after, if they lived a good long life, after 10 years or 5 years, whatever the money they brought in, all that money was gone. And now all they had, instead of paying the full rate, all they had left was Medicaid. So we were always getting requests from these private nursing homes to accept the Medicaid patients that they couldn't afford to hold. We already had a pretty high percentage of Medicaid patients, more than the others sustained, because we did have an endowment. So it's always a juggling act. Unless you have an endowment or somebody that's willing to help you out and underwrite your costs, it's no place to try to make a profit or run a business that's a for-profit business. So
It is fantastically complicated. The facility that I referenced that had declared bankruptcy on Friday is owed over $120,000 for Medicaid pendings.
Yeah.
So that's not helping. I'm not saying that that's why they declared bankruptcy, but that's not helping.
yeah, so and that's a federal rate. And it's of course also a function of the fact, as you say, we're one of the 4 oldest states.
Right.
So we have more and more people coming into them. And thankfully, more and more people are living longer lives. And we see more and more people that are centenarians. I hope to be one soon.
I went around and interviewed centenarians, Mr. Chairman, in facilities. It was a really wonderful experience.
And my mother made it past 100, but we were able to keep her in her own home, which was her wish. And she had managed her own funds very well. And my brother and I were chipping in only for her last year that we were contributing. But if you don't have family that's willing to chip in and you don't have enough money set aside, it becomes very difficult. So
It is, absolutely.
I don't know what we can do. Representative Priest for a question.
Thank you, Mr. Chairman, and thank you for being here and for everything that you do for New Hampshire. Do you have any projections of what the need is going to be in the future? How many of us aging New Hampshireites will be needing Medicaid and a nursing home facility, and what does that look like?
Well, right now, the assumption is there's about 3,500 Medicaid residents in nursing homes, but what we're going to see, obviously, is we're the second oldest state in the country by population, and our population that's 65 and older is dwarfing our population that's 18 and under. We're one of 11 states with that distinction. So one of the problems that we're going to have is staffing the nursing homes, because there's simply not going to be enough younger workers to staff the nursing homes. And we are inexorably going to see more demand for nursing home care. We have a nursing home bed moratorium here, so we're not building new nursing homes or putting beds online. And as Senator Rosenwald said, there are facilities that are waitlisting prospective residents, including county facilities, because they simply do not have enough staff to be able to responsibly admit those residents. And so my concern then is that those folks are going to get sicker and they're going to end up in the hospital. And then paradoxically, we're going to end up paying the hospital to care for them. And then we also have the problem of people not being able to access nursing home care from the hospital and getting jammed up in the hospital. So it really is a vicious cycle right now. And to whatever extent we can, through this working group and your other efforts, try to get ahead of this, we're only going to get older as a state, and we're only going to see more demand.
Representative Munns and then Representative Mooney.
Thank you, Mr. Chair, and thank you for taking my question. And I'm going to I'm going to apologize right up front for my ignorance on this subject. From what I heard, clearly inflation is one of the driving factors behind what's going on. But how much has have the cuts in federal and state funding added to the problem?
Well, we haven't, in fairness, seen any effects yet from HR 1 at the nursing home level. I think where we would see it would be in 2028 with the MET. We would start to see a diminishment in resources to the state of New Hampshire, which is going to have a downstream effect, I think, for all providers. I will say that one aspect of HR 1 that was not positive for nursing homes is the ability to bill retroactively for a Medicaid resident. So under the laws that had existed, you could bill up to 90 days prior to them being determined eligible because they were in your facility that whole time and you were caring for them. It's been changed to 60 days. And so that's going to make facilities more reticent, I think, about taking on the risk of a pending Medicaid resident because it just becomes more unpaid bills. And I have a lot of facilities right now that are slow rolling payments to their vendors because they're not getting paid by the state.
Further questions from the committee? Representative Mooney.
Thank you, Mr. Chairman. Thank you for being here. With regards to the makeup of this working group, although I can appreciate all the associations that are mentioned here, I see no place for a nursing home administrator. Do you feel as though a certified public accountant specializing in nursing home cost reporting is an appropriate representative of those that day in and day out administer our nursing homes and know them best?
I think it's entirely possible, Representative, that the representatives from the counties and my own association might be nursing home administrators. Certainly, there is the possibility of them being participants within this process. I don't think anyone would be excluded from participation. I think what we are looking for with that particular language is somebody who really understands, as my answer to Representative Dan McGuire sort of indicated, how very Byzantine the nursing home reimbursement system is.
So Representative Mooney, of the 4 bills we heard today, 3 of them are coming to Division 3, 600 being the exception. That's going to Division 1. The rest are coming to Division 3. Have you made a schedule yet?
The answer is no. However, I am looking at April 20th at 9 a.m.
Okay, and Division 1 is also on the 20th, so we'll see if that all works out. 9 a.m., Division 3 on the 20th. Anything further from the committee? Representative McGuire, Dan McGuire.
Yeah, and so if all the divisions can finish their work on April 20th, then we could maybe exec these bills on the 27th. They're not due till the 7th of May, so we could, if necessary, have our exec session May 4th, but April 27th might be better.
And we might see more bills coming in the next.
Yeah, as second committee
calendar.
stuff, yeah.
So,
But there's no House session until the 23rd,
Yeah.
so we won't get any bills until then. If Republicans could stay for a brief caucus after this, that'd be good. Thank you.
Thank you all. Thank you all for your contributions and your inputs. We'll be doing our best to combine them all into the bills.
Thank you, Mr. Chairman.
Thank you. And here's the number of people that signed up for this. Stephanie Oziek is in favor. Mackenzie Shepherd is in favor. Rosemary Semino is in favor. From Golden, these are people from Golden View. Cody Gravy, I can't quite make out the last name. Sister Jean Boucher from Holy Cross. Also Norma Como. Sister Ann Antel from Holy Cross. Sister Lucille Brand from Hurley Cross, Sister Diane Villeneuve, Sister Eleanor Branch, Teal Howe, Stephen Woods, and Malcolm, I think it's Jen, all are in favor, no one opposed. Thank you for your inputs.
Yeah, yeah. Without man.
That's great.
All right, well, wait, like the Republicans to hang around a little while.